Hi, lovelies. When I worked in a bank, you could tell when someone's holiday had gone wrong before they sat down, not because they told you, because the account had changed. A week before they'd left, everything looked ordinary, normal balance, normal pattern. Then they came back, and the overdraft was on, the credit card had moved. The small savings buffer they'd been quietly building, gone. All from one disruption, one flight. And the thing is, they weren't careless people. They'd saved for that trip. They compared prices. They found a deal. They thought they were prepared. What they didn't know was that they hadn't booked one holiday. Financially, they booked several separate risks, and almost nobody sees that until it is too late. Section 1. This is the one that starts before you even know it is happening. I used to see the fingerprint of it before a customer had finished sitting down. A transaction on a Saturday night. Late, an airline reference, but not the one from their original booking. A hotel near a UK airport, not the hotel they'd planned. Then the destination hotel, still charged. Because it was non-refundable, because the hotel had no idea the flight had gone. By the time they sat across from me, the account had told me the whole story. Flight disrupted. Emergency accommodation needed. Replacement flight found, at whatever price existed at 11 o'clock that night. Original costs still on the statement. New costs layered on top. It was showing a chain reaction nobody had designed for. In 2024, 1 in 3 passengers flying from a UK airport faced a delay or cancellation. That is not a freak event. That is the operating background of modern air travel. Half of all UK flights didn't depart on time last year. I saw it constantly, careful people caught out by an architecture they didn't know they'd built. Nobody had ever shown them what disruption actually costs. Not the flight, everything that follows it. Section 2. This is where the chain starts, and it starts fast. A cancelled flight means one thing immediately, somewhere to sleep, not the hotel they'd already paid for at their destination, a new hotel that night, near the airport. On the same night, every other passenger from the same cancelled flight needs the same thing. Dynamic pricing knows this. When the Heathrow fire shut the airport in March 2025, rooms cost £70 to £100 the week after. That same night, they were charging £380 to £650, same rooms. One event, 5 times the price. I remember a woman who came in the week after a trip had gone wrong. The airline had given her a voucher. She thought she was fine. The voucher covered £60 toward a replacement flight. The emergency hotel had cost £140. The meal in the terminal, another £20. She hadn't claimed for the hotel. She wasn't sure she could. This isn't about what you can and can't claim. It is about what people budgeted for and what they didn't. People budgeted carefully for their holiday. Nobody ever budgeted for the night their holiday stopped. One simple way to think about it, when you price a trip, add one emergency hotel night near your departure airport. Not because it will happen, because if it does, you'll already know what it costs. Section 3. This is the part that doesn't show up on the booking confirmation. It shows up in the state you are in when everything stops. You are in a terminal. It is late. Your flight is gone, and now someone needs to make a decision. That someone is you, stressed, tired, phone in hand. Children asking what is happening, or a partner waiting for an answer. In that state, you're about to make one of the most expensive purchases of the entire trip. The replacement flight. Not the one you found over 3 weeks of searching in January. The one available right now. Stress compresses the time horizon. It removes the patience that found you the good deal in the first place. And what is available is priced against everyone from the same cancelled flight, making the same decision at the same moment. I used to see those transactions on accounts the morning after. Not just because of the size, because of the time, late Saturday, late Sunday. The holiday had been planned over months. The replacement was bought under pressure, with no comparison, at whatever price was left. That is a separate financial event on top of the first one. And it arrived before they'd even left the airport. If any of this is sounding familiar, you are not alone. Most people have been through something like this, or they know someone who has. But here is what I kept noticing after years behind that counter. The people who came back in the worst shape weren't always the ones with the biggest disruption. They were the ones where the savings they'd built had gone into the holiday itself. There was nothing left behind it. So when the chain started, there was nowhere for it to land except the credit card. And that is the part almost nobody thinks about when clicking confirm on a good deal in January. Section 4. This is the one I saw trip people up most. Not because they hadn't tried to protect themselves, because they thought they already had. I remember a couple who came in together after a disruption. They'd made a claim on their travel insurance. The insurer had paid out, but not what they'd expected. The excess had been £150 per person. The policy had covered the flights, not the hotel, because the delay hadn't lasted long enough to trigger the accommodation threshold. They'd done everything right. They had the insurance, and they were still sitting in front of me, working out where the gap had come from. Here is what I saw happen in cases like that. The airline pointed at the insurer. The insurer pointed back at the airline. And meanwhile, the couple were carrying the cost themselves. That pattern repeated more than I expected. Weather, air traffic control, infrastructure problems at the airport. Each one sent the claim somewhere else. Each somewhere else sent it back. The person in the middle kept waiting. Research found 7.5 million UK holidaymakers may have insurance that does not cover what they assume. I believe it. I watched it happen. The gaps are only visible when the system is needed, and by then, you are already in the airport. Section 5. Here is the thing I kept coming back to every time I saw this pattern. The people sitting across from me hadn't done anything wrong. They'd saved, they'd compared, they'd found the deals, they'd even bought the insurance. And yet the account told a story they hadn't written. Because what looked like one holiday was actually several separate decisions with no connection to each other. The flight didn't know about the hotel. The hotel didn't know about the car hire. The insurance policy had carve-outs none of them had read. And when one piece moved, none of the others moved with it. The flight was the trigger. The emergency hotel was the first domino. The replacement flight was the second. The non-refundable bookings at the destination still charged because their contracts were intact. The credit card was where it all landed, and the interest was where it stayed. For months, what I didn't see on those accounts was what I'd come to call coming home money, a small amount kept separate before the trip. Not for the holiday. For whatever the holiday threw at them on the way back, an emergency hotel night, a last-minute flight at whatever price was left. The people who had it, even a few £100s, came back in a different shape, not because they'd spent less, because they'd had somewhere for it to land. The people who didn't had put everything into the trip itself, and when the chain started, there was nothing left to catch it. Section 6. This is what I saw separate the two outcomes. Not income, not luck. One difference in how they'd thought about what they'd built. Two people, same flight, same cancellation, same Saturday night. The first had booked everything separately to save money, flight, hotel, car hire, all the best prices, all the best platforms, all the right moments. She'd done everything right. When the flight was cancelled, the emergency hotel went on the credit card. The replacement flight, double what she'd paid originally, went on the credit card. The destination hotel didn't refund. The car hire didn't refund. She got home with a balance she hadn't had when she left, and months of minimum payments ahead. The second came in a few days later. She sat down and slid her card across the desk. She wanted to move some money from the buffer account back to her current account. She'd used it, not much, a few £100s. But she'd known it was there. She'd opened the buffer account specifically for this. Not for the holiday, for the disruption. A rough few days, she said, but she wasn't in any trouble. She knew what it had cost. She had somewhere for it to land. I asked her when she'd thought to set it up. She said, before I booked anything. That was the whole difference. One person had a place for it to land, one didn't. None of this is about avoiding holidays or spending more than you planned. It is about knowing what you've actually built when you click confirm on those separate bookings. Every one of these patterns can be interrupted. The decision is simple. Before you book, not after, ask yourself one question. If the flight doesn't go, where does the money land? If you can answer that before you leave, you've changed the architecture. She slid her card across my desk a few days after it all went wrong. She'd set up the buffer before she booked anything. She didn't make a big financial move. She made one quiet decision in advance. And when everything went wrong, she had somewhere for it to go. That is the whole thing. Slow down, think clearly. And that is how you start to love your money.